Well, welcome back, and it's time for the Word on Wall Street. Top investors watching your money. Joining me right now is Verdence Capital Advisors CEO Leo Kelly and Rosecliff founder and managing partner Mike Murphy. Gentlemen, great to see you both. Happy Friday to you. We got a market that is at the lows of the morning. Dow Industrials right now down 390 points. Mike, I want to kick things off with you after FedEx announced it's going to raise rates by an average of 6.9% yesterday. It's basically seeing global demand weakening, and it needs to raise prices. It doesn't look like inflation has peaked based on this news. Your thoughts?
Good morning, Maria. Great to be here. Well, I think there's even more than that. So what FedEx is telling you, they're going to lay off workers. They're going to close certain shipping centers. So that's, you want to talk about slowing the economy. That's going to crush this economy as they lay off more people. And now for the people who are in business, they have to deal with the current environment. They're going to raise prices. So I think from stock specific, I think after this massive sell-off, after FedEx's lowered guidance, I think when you look out, their guidance has not changed, Maria, for 2 and 3 years out. So they expect to be back. So I think FedEx is actually setting up as way oversold here. But I think the bigger story is the macro picture. This isn't isolated to FedEx.
That's right.
The Fed keeps raising interest rates like they are and like they say they're going to, you're going to be able to cut and paste this FedEx story to a lot of other large corporations and small corporations around the U.S.
Yeah, and the CEO said he is expecting a worldwide recession, Leo. We're seeing that in housing. The 30-year fixed mortgage rate reaching 6.29%, the highest level since August of 2007. This is freezing out sellers, certainly, and buyers. Leo, are there any other areas that are as vulnerable to this move in rates?
Well, certainly, I would say most areas are going to be vulnerable to this kind of move. Inflation, not only has it been big, but people, for some reason, continue to expect it just to go down because time passes by. We saw Esther George, the Kansas City Fed president, say we haven't hit a peak yet a few weeks ago before we got the nasty inflation report just a couple weeks ago that dropped the market. So I do think housing is kind of the canary in the coal mine. We're seeing that this is just shutting down very quickly. And what's interesting is we continue to hear folks say, well, the Fed is continuing to raise rates and they're going to hurt the economy. The Fed has no choice. We are not fixing the problem. We are not increasing supply. We're not reducing monetary levels. So the Fed has no choice, and if he doesn't get help from the fiscal side, then they're going to have to continue to go on this pattern, raising rates.
Yeah, I mean, what has this done to both of you? Mike, tell us first, in terms of your ability to find growth stories and invest. Have you changed the way you're allocating capital in the face of a fast-changing, declining macro story, Mike?
Maria, really, we haven't. It's just we're seeing more deals because more and more companies are finding it hard to find capital. So we do have money to invest at Rosecliff, so we're seeing more deals. But really, Maria, I think if the Fed keeps raising interest rates, yes, they may tame inflation, but at what cost? I don't understand at all what destroying businesses, and it hasn't happened yet, but it will happen. It's going to happen if they keep raising interest rates and companies have to pay more and more to get capital in the door to fund their business. Fine, inflation will be under control, but a lot of companies you and I talk about won't be in business anymore. So, you know, we see opportunity now still, but I think there's going to have to be a better plan for this because at this rate, it's going to hurt a lot of companies, and I would unnecessarily hurt them.
Yeah, for sure. Leo, that's what we're all expecting in 23.
Well, yeah, and I understand Mike's point, and he's right in that it's going to hurt businesses, but we have no choice. Inflation, we haven't had it in so long. I think people forget how damaging inflation is. And remember, these high inflation numbers are over inflation numbers from last year and the year prior. And so if it would take disinflation to bring down prices. So we can't keep running at this clip. Now, that said, there are opportunities. There are industries that do well in inflationary environments. And so, again, this is a time where you have to be smart. You have to embrace volatility. We will have increased volatility. I do think we're in a secular move higher in interest rates. And so be careful with your fixed income. When you look at small cap stocks, you look at some of the international opportunities, there are areas in the marketplace that do fine in an inflationary environment. Nobody does all that well in a recession. So be cautious and take advantage of volatility.
Yeah, those companies that have pricing power typically could perhaps escape some of the selling. Mike Murphy, great to see you as always. Leo, you're sticking with us all morning, and we're grateful. Thank you, gentlemen. Great word on Wall Street. We'll see you soon. Have a great weekend.